Morning, ladies and gentlemen. This is Greg McCloskey, and this morning opening Forex commentary for FXStreet. Over the weekend we did have some news out of the Euro bailout, the Greece bailout situation, 110 billion euros austerity programs. The question is whether it's all going to go down, and how successful the nations will be as far as what it's doing. Not just in Greece, are they going to have they're going to have strikes? There's going to be unrest. It's unfair. The austerity programs taking place are going to be a burden on the Greek population, but also other nations. Germany. How are they going to feel, German public, about what is being done, so on and so forth. So, taking a look at some of our currency pairs, we're going to move over to the euro, of course, because that's the major currency pair here as we enter in the morning. We're going to take a look at the hourly chart first to begin with, and what we can say from this is that the market has voted to the downside for the euro. The euro opened up higher and then quickly came down on concerns that the market might not, or the governments may have more difficult time passing this bailout than what is expected, and the time it's going to take also for full completion of this and acceptance is going to take some time as well. So all this has the euro on the defensive here. We moved up to a new high of 133.61 first in the process, and then moved below this 200-hour moving average. This 200-hour moving average is a green line on our chart. It's what we call our confirming moving average. Usually our trigger is a blue line, so when the market breaks above the 200-hour moving average, it gives a bias to the upside. Then we like to see the market break through the 200, confirm the trend like it did here, but in this case the market failed. Just like here it failed, it had failed right here as well, and the market started to move back below the moving average here, just like it did here. In this case, the market went down, back tested the 100, and then moved back up. Today we came down, tested the 100 right here, moved back higher, then broke through, and you can see we've been using that 100-bar hour moving average as a resistance here. In addition, the 50% retracement of this move up from the last week's low to the high here to today comes in at 132.38 and currently price trading at 132.40 as we speak. So we're right at resistance, right where the 100-hour moving average, right where the 50% retracement level is, and that's going to determine which way we're going to go here for the currency pair. If we break above this level, look for the market to move to the upside with 62, and then this 90 area where the 200-hour moving average is starting to move to. If we're able to stay below this line, however, we do have support down here at 132.08. That's a 61.8% retracement of this move up, and that's going to be our next support level for this currency pair. If we break through that 132.08 level, we should see further declines in the downside for the euro versus U.S. dollar. Let's go to the sterling versus U.S. dollar, and of course we have the UK election coming up this week. It's going to be the key event, obviously, for that currency pair. And looking at the daily chart here, the market moved up, tested this old trend line here. This old trend line comes in at the 153.52 level. The high for the day came in at 153.30, so it didn't quite get anywhere near that, just 20 or so pips away. But we'll be watching this line on the daily chart later on. But we're not currently trading way below that at 152.64 as the market came down quite sharply from the opening, just like the euro. We did try to find support against this 100-hour moving average. Again, that's the blue line in the chart. The market moved through that level at the 152.88, then starts move to the downside from the lows. Against a 61.8% retracement, you can see that the market dipped below those that level on its way to the low for the day. But each of the time, these hourly bars were not able to close below it, and that's given the bulls a little bit of a push to the upside. Where do we go? Went right up to the 100-hour moving average. That 100-hour moving average currently comes in at the 150.66 level. We also have the 57 level, which is a 50% retracement of this move up. So we're running into resistance here at the 67 level. Getting through that level or not is going to determine whether we move back higher toward this green line up here, or if we find the sellers against this level, which so far we are seeing, and the market gets through this 61.8% retracement and then on its way down lower for that currency pair. So we'll be watching key level for the sterling versus US dollar at the moment. Let's take a look at the dollar versus Swiss. Take a look at the hourly chart to begin with. The 100-hour moving average currently comes in at 108.28. This is where the market is just below that level. We just went above it, tried to move its way back to the upside. The market failed. We did come up earlier in the day up to this 108.45 level. This is a kind of what I call a remembered line. You go back in time and you take a look at these highs right here. This high, start to use these lows, see this low, see this highs right here. Market comes up to that level and fails at the top and then comes back down. So we'll be watching this 100-hour moving average. This 100-hour moving average comes in again at 108.28. We should see the market move down toward this 200-hour moving average. It comes in at 107.82. Canada. Dollar Canada moved sharply higher last week, and breaking above that par 60 level. You can see this par 60 level is a key resistance level for us, and it's also the 62 level as well. 50% retracement. This move from this low to this high comes in at par 62. The 60 level, you go back in time, just watch this red line right here. You can see all these lows and highs that occur on this hourly chart around the 60 level. All these are key remembered lines that the market does remember. It all started back here on March 19th for that currency pair. So we'll be looking for support now as the market corrects off of this high. We're not able to take out the new high. We'll look for support against at the 101.01 level for the dollar versus Canada here today. Take a look at the dollar versus yen, and what is key here is that the market has formed this bottom here, a straight line going across, 100-hour moving average moving sideways. How many times the market has tested this level over the last few days? A number of times, and the market is trying to break to the upside. This is what we expect. Now we have to get through this 34 level. This 34 level was the initial high here, going back to April 23rd, and then on this day right here, April 28th, the market came up and found earlier sellers against this, as it did here at the 25 level. So we're seeing the sellers against the 34 level. Obviously, the market has to get through this 34 level and not just have this short-term, this short-term, not just have this short-term move to the upside and failure. It's got to find the momentum to the upside above this 34 level and starts move to the upside here for that currency pair. On the downside, this floor is going to be the key level. It's a flat line. It's saying that the market is non-trending. It's time for a trend, and that's what we'll be looking. So taking a look at the daily chart in the dollar versus yen, where can we go? 95.08 would be our next level on the top side. That's a 61.8% retracement of this move down from the April 2009 high to the low that we saw here on November. So 95.08 would be the next level, and then we're starting to look up toward these areas right here for the currency pair, which includes this high, which is 95.80, and ultimately perhaps this high up here, which comes in at 97.74. This is Greg McCloskey with the morning report for FX Street. Have a great day with your trading.